Okay, welcome to the FP&A Podcast, where finance finally meets the future. And my name is Roger Knocker. Today I've got my guests, as per usual, Donovan Moses and Anthony Wilson. Welcome, guys.
Thanks, Rog.
You all ready to get going on leave? Is this your last week?
Yeah, very much looking forward to a nice hot summer break. So yeah, very much looking forward to it.
Yeah,
Did you, Donovan?
I must say I look forward to the mince pies and the milk over this festive period. Can't get enough of those. So yeah.
Brilliant. So today's a continuation from a series we started a while back. Just to paint some context, is previously we've been involved in setting strategic objectives for companies. One of the cascades that you do is you go into the finance department and you look at the balance scorecard and you ask a couple of questions. Financially, the financial perspective, how do we increase shareholder value? And we spoke about efficiency and contribution in that episode. Okay, so then next we went on to the customer perspective and we said, what value do we offer our customers? Now, in finance, we have external customers, and we normally interact with them mostly through debtors, actually. But we also have internal customers who are our colleagues on Exco, and there's a whole lot of services and things that they need from us, like standardized reports and financial advice and being that trusted advisor. Then we went on to the internal processes and we said, to satisfy our stakeholders, which processes must we excel at? And in the previous part to this podcast, we spoke very much about quality. The first internal aspect or dimension of business processes was quality. Remember, when you get into financial processes, there's a whole hierarchy of processes, from planning to reporting to account reconciliations to governance. Each of those are processes and they have sub-processes. So you can land up with 30, 40, 50 processes in a finance department. We just flipped the dimension slightly. We said, well, if we look at any of those processes, there are some key attributes that we want to look at. The first one was planning those processes. And in the previous episode, we spoke about how to plan your processes. Now, today I'm introducing another dimension, which is quality of processes. And there's a whole lot of things that we can talk about. You know, it's the quality of your data and controls. It's the quality of your processes. It's the quality of data that you show the business, the reports, the forecasts, etc. So that data aspect can permeate through many layers again. But we're going to narrow this podcast down to the quality of data and controls. So we're just going to scope right down. And we're not going to just say we want quality. We're going to be asking, how do we get quality, which is a slightly different question. We've got to go into more depth and more of the action items and the things we put in place to achieve quality in our processes. So maybe I'll just open the floor up. Donovan or Anthony, would you like to talk about an aspect of quality around data and controls? Let's just go around the room and then we'll drill in once we've got three good concepts going.
Yeah, well, let me kick off. So, you know, one of the key aspects to quality is making sure that your master data is consistent, is correct, and is well governed. And I think that drives quality throughout your processes, from your month start right through to your final reporting at the end of the month, because you know, if that's controlled correctly, that everything's consistent, everything's standard, and you know the business understands what the master data looks like. Just to make sure we're all on the same page, master data is the structures that you maintain within your business. That's your chart of accounts, your products, your customers, etc., etc. The master data are the actual structures and lists of accounts and customers, etc., that you maintain, and all the information around them.
Donovan, what can go wrong with master data?
I think typically the common error we see or the challenge we see is around chart of accounts. Typically, especially if you're in a group and there's different companies and they have, because essentially by their business model, they might have different chart of accounts, and then rolling that up into a group structure and catering for it in a consolidation tool, etc. Sometimes when there's changes to that account structure, it doesn't filter through reports, for example, and then the ledger says one thing, but your reporting says something else, and variance analysis are incorrect. So I think chart of accounts is a key thing. And sometimes certain entities can break their chart of accounts into thousands of accounts due to maybe disclosure requirements. And if you multiply that across different entities, you can understand how that can get really complex. So chart of accounts, I would see, is one of the key areas where master data, if not managed and controlled, can really halt your quality of data. Yeah.
Yeah, so for me, master data, there's so many dimensions to it, because the one is for reporting, like you said. So there's certain columns that you want standardized so that when you run the reports, they can all group on that column or that field. The other one is that you've got workflows in your ERP system happening. And if the master data is incorrect, the incorrect workflow is going to trigger, or the workflow is going to fail. It's going to go to the wrong person. It's going to trigger at the wrong time. The wrong process will happen. So the master data will fail you there. And then just practically, if you think about master data, let's say you've got customer details and the details aren't up to date, and you send an email to the customer to confirm, and you've got the wrong email. That email is not going to arrive. The invoice isn't going to arrive. You're not going to get paid. Or you might have the wrong delivery address on your master data. It hasn't been updated. The client's maybe moved, and the truck goes out, and again, it gets delivered to the wrong address. I mean, these are little practical things that can happen. Yes, and you were going to say something about.
I was going to say,
master data,
just in terms of what you're saying there around the, customer. I mean, at one of my customers around, the management of their customer master. I mean, they didn't have any controls around creating new customers. So the same customer was created often 3 or 4 times, and with a slightly different name, and there was no standardization in terms of the key, which made it very difficult to know what, where, if the customer's information's changed, as you mentioned, which one changed. But also, if you're wanting to understand that customer, and how what their customers buying from you, or the services they're buying from you, it's very difficult because they exist multiple times in the business. And so it's just one example I've come across in the past, specifically around customer, where not having those controls in place has made it very difficult, not just from a invoicing point of view, but also from a data point of view and understanding your customers.
Yeah. Roger, if I may come in from a slightly different approach, or something that you alluded to around cost centers and looking at how you report your data at an account level, but not only at a chart account level, but a cost center level. I mean, if you're looking at a manufacturing organization where one of their key KPIs is, for example, their product cost per ton. And if you have several manufacturing entities or several factories, you want to keep those cost centers standardized, because for benchmarking, you want to know this part of the factory, how are they contributing to the cost per ton from a cost center breakdown point of view. So you can strip your factory into multiple cost centers that make sense from an activity-based point of view. But if all your factories, especially through acquisition, if it's not streamlined the same, how do we benchmark, or how do we see the overall cost per ton, look for efficiencies or wastage? So, just also standardization of master data, for example, from a cost center, as alluded to, is very key, and it can just separate you from your peers and your competitors in getting the right insights that you want. So master data is so key at that foundational level of quality and insights.
Yeah, so master data, these ERP projects that get implemented, and they always run over budget and over time. Not always, and we say to ourselves, why does that happen? Like, why do people keep implementing that system that always overruns? Part of it is that the business wasn't disciplined before that ERP system. That ERP system has forced them to look at master data. Sometimes you get new roles, master data manager, master data administrator, things that didn't even exist in your vocabulary before the ERP project. Suddenly you've got this role, and the consultants will tell you to take this thing very seriously, right? And a lot of those projects fail because of change management, master data, and data migration. Those are the three big things that I've seen why these projects fail. And master data is just one of them, right? I was in an ERP project where we, the divisions, we were putting an ERP system in, and we hadn't thought to standardize our item master. Well, through the project, we were trying to, that came to light, and we obviously went through it. But an ERP system is going to automatically calculate what the supply chain needs, and it's going to start producing that item. So if you've got that item existing 10 times, the ERP system might go and start manufacturing that item in 10 different locations when you maybe only need it in 1 or 2 places. So if you had it standardized, if you only had one instance of that item, well, then the ERP would say, okay, we only have to make 10,000 of these widgets, and then it's a supply chain issue how we ship them then out. But that's a very practical example why you shouldn't not standardize, or why you should standardize and have one instance of that item master. Yeah, so that's a good reason why we need to standardize. Just think of the waste that will occur if we don't have that item unique and standardized. And Anthony also gave some examples there of customers that customer existing a few times.
Yeah, exactly.
Donovan, maybe tell me from a finance point of view, what typically happens when you create a new item master? What are the kind of processes, and who does it have to go through for it to get into that ERP system?
Yeah, I think number one, we need to understand why there's a new master item coming, and typically, and the context. So let's say it's business as usual, and let's assume it's a raw material item or a supply chain item that you need for your process. So typically, maybe it's a substitute raw material item. Your normal raw material item is not available, for example, due to various issues. So you have a substitute that you want to do, and that just creates some other issues, because if you use a standard costing system like a bill of material, that's another master data item. So how do your bill of materials now consume this new raw material item? Do you have a new bill of material, or do you have a version 2 of the same bill of material? So there's some consideration that a business needs to have when updating any master file, and it starts with a dictionary of sorts on the different scenarios that one would have when creating this new master file. And initially it would come from a business requirement, where there's this business requirement, and that document needs to have the necessary context to explain to then the technical colleagues what is the need, the idea in terms of the reports it needs to update, the ERP processes that's involved. So you would need a proper documentation flow, a proper process that needs to be from business to finance to technical to reporting through to your operational, depending your operational teams, depending on the context, that can understand end to end and feed into this document. So the requirement is complete from a master data. Now, typically with your flagship ERPs, there's the standard fields that one need to have, but oftentimes there's customizations, and one would need to factor those in. But the principle is a process, a process for updating with the right people inputting the data, the right fields, and the right approvals into that situation. Yeah.
And one of the inputs, so you're talking potentially 3, 4, 5 different people
Yeah.
or departments
Yeah.
that for one item have to get
Yeah.
the accuracy of that data right, and that it might start in sales, R&D, and it makes its way finance would typically update the costings, make sure the costings of that item are right.
Absolutely.
And that's a key part of what finance does, because that's going to drive what the margins are. It's going to drive what the costs are, the provisions. It's got a lot of implications for finance. So it is one of the things that finance should take very seriously is the accuracy of that master data.
100%. And the process that then switches that master data item on or off. You could have done everything and technical did its part, but no one flicked the switch to say live as of this date. And lo and behold, the production is going to use the old material. And you got a negative on the one side and a positive on the other side from a stock point of view. So yeah, I mean, that whole process flowchart is so important. Yeah.
If I can also just add to that, I mean, I think it's important also that process and flow goes across all the different systems that you're running in the organization. So if you've got your ERP, which is your core ledger, and in most cases that's the source of those structures or that master data, etc. But if you've got other systems that need to leverage that, we need to make sure that is all, first of all, correct in your ERP, as you say, but also flows through correctly to the other systems that are using that master data. An example of where they can go wrong is in one of my customers, they do a budget calculation, type of bomb calculation in their budget, and one of the key items that drives the sites or business units that the production goes to is linked on each product, and in the actual master data in the GL, it was incorrectly tagged, and that would flowed right through their budget and meant that the budget for the product ended up in the wrong business unit and wrong site. And the impact of that going forward can be quite big, or at least can create quite a lot of wasted time, because your comparatives are out of sync, and you're either going to be incorrectly reporting, or you're going to continuously be editing or changing your reporting. So it's small things like that, if they fall through the gaps down the line in other systems, can actually create bigger problems, and sometimes those problems will go unseen because they're not obvious. And so that process of managing that master data is so critical to avoid not just issues in your ledger, but issues in other systems down the line, and other reporting and planning systems, etc.
So just getting back to planning, how does master data impact planning? Like when you're building a planning model, how does it impact? Where have you seen it go horribly wrong, for instance, where people are trying to plan and they've got the wrong master data? Lay that out for me. What happens?
Yeah, I mean, what'll happen then is you're gonna create ongoing issues when you're trying to plan and report on your planning. So, for example, if your master data is out of sync on the your GL and your budgeting system, while you're budgeting, you're going to battle to align the two systems. But also when you're reporting against your budget or your plan, your comparatives are either going to be wrong, or you're going to spend lots of time trying to make sense of them and align them. And you want to, as a business, be able to manage your business against that budget or plan. And if that master data is out of sync, that becomes quite difficult, and often you will have errors coming through. And that'll go across, different aspects of your master data. It could be your accounts, customers, products, etc. I mean, I had one customer as an example where one of their business units decided or didn't like the structure that they had for their customers in the ledger, and decided to use a different structure in the budget. And they created mappings from their ledger for actuals, and a mapping for budget back to actuals. But they always had an issue during the budget and also with their reporting, where questions were always asked, well, where did that actual number come from when they're looking at it against the budget? What makes that up? And vice versa, where did that budget number come from and what made that up? And it wasted a hang of a lot of time from individuals reconciling and answering those questions on an ongoing basis. In the second round of the budget, they, in my opinion, correctly decided to correct the customer structure of the ledger and have that flow into their budgeting solution, and hence bringing the consistency, saving time, but making sure the information is accurate and easy to manage the business off.
So basically, they have this project to automate and get efficiencies, but they master data is not quite there, and they lose all those efficiencies. All those steps get replaced with mapping steps and trying to understand the data, which isn't really sensible, is it?
And what also ends up happening is you end up taking some of that reporting out of the system into Excel, and as soon as you do that, then other areas come into the information, and you can't reconcile it. So it just creates more and more problems as you go forward.